I want to welcome you to part 2 of the balance sheet. And this time we want to do the liabilities side and the shareholders' equity side and maybe the stockholders' equity. These won't take as long because there's not near as many sections of it. The current liabilities only has 3. It has the liabilities, it has current liabilities, long-term liabilities, and other liabilities. Okay, current liabilities you're familiar with. That's just debt that you have that's due within 12 months. Long-term liabilities is debt that you have beyond the 12 months, and other liabilities are ones that just don't fit anyplace else, so we put them there. And then the other side section we're going to have is shareholders' equity, and it's called, various things, which we'll get into in a little bit. Okay, current liabilities. Usually the first one, the most common one, is accounts payable, and most of you are familiar with that. And for that one, we're going to use $24,500. Then we will have the notes payable that's due within 4 months. Anything that's due within 12 months is a current liability. So if you have notes payable due in 12 months, that would be a current liability. If it's due in 13 months, it would be a long-term liability. So keep that in mind. And then we also have a common one, wages payable. And these are not even close to all the payables you may have. But you got the idea. It's payables. It'll be a liability, and whether it's short term or not, that's you have to determine. The other one we have is unearned revenue, and that's one that people don't usually care for too much because you always forget that's a liability. And I haven't got these filled in, so there's the numbers for that: $13,800, $16,300, and $5,900. And then the last current liability I want to put in here is the current portion of a long-term debt. Okay, this could be most of us have mortgages, and mortgages don't let you wait until the end of the 30 years to pay for it. You have to make monthly payments. So that's what this represents here. This is the monthly payments of the mortgage, but it does not include the interest part. It only includes the principal amount. So you have to be able to separate the principal from the interest. And for right now, that'll be given to us, so it's no big deal. So, and then we want to add these up, and that'll give us our current liabilities. Okay, long-term liabilities, again, we're not going to try to do all of them, but we're going to have long-term debt. Now, this is the notes payable that you may have. That's the beyond the 12-month period. So like if you have a car payment, the first 12-month car payment principal will go up here. After the 12 months, it goes down. The balance will go down here for the long-term debt. But again, it's only the principal, not the interest amount. And then the other one we have is bonds payable. And right now we're going to keep it simple, assuming the bonds were sold at par value. So we don't have to worry about them. That's $28,000, and then we add these two together to get our total liabilities of $77,300. An example of other liabilities that don't fit anyplace else would be, if I can find it, there it is, deferred tax liability, kind of like the deferred tax asset. And again, you'll get that in a later chapter. This is the difference. What it comes to is the difference between financial accounting and tax accounting, the tax liability that you have between the two of them. And then for the total liabilities, we add these 3 numbers up, and that gives us $165,200. And I got carried away there. $153,860. I'm only supposed to be $1,260. Okay, that's your current liabilities, long-term liabilities, and other liabilities. Then we're going to do shareholders' equity. That's the next section. Okay. On stockholders' equity, shareholders' equity, you always start with contributed capital, and we start with preferred stock. Preferred stock has preference over common. And that's going to be $37,150. And then to go with preferred stock, we have the additional paid-in capital from preferred stock. And for that, that's going to be $11,500 for a total of, add those two together, $48,650. and that is total contributed capital by preferred stockholders. Next section is the common stock, and that's going to be for $96,700. And then we have additional paid-in capital for common stock. Again, this is the amount that you received in excess of the $1. That was the $33,250. Probably really should have reversed those, but that's okay, no big deal. Then that gives you total contributed by common stockholders is those two totals. Those two added up. And then that will give you total contributed capital by shareholders, which are those two added up. So that's what the shareholders added. And then the next one we have is simply retained earnings. Now there's more to it than that, but that's what we're going to use right now. And that's 116,130. Okay, now accumulated other comprehensive income. This is a new section that we have to add. And it can be a separate statement or part of the balance sheet. Usually it's part of the balance sheet. And this would be things like other unrealized, that one right there. Let me hit. Okay, and for that one, I need to wrap the text. There we go. There. Okay, wrap the text. I lost the formatting on that earlier. And that's for $11,420. Now, what this is, and you'll get this section a little bit later, but remember over here we had available for sale securities? Those available for sale securities is recorded at market value. And what we have then, we have an adjustment to either increase or decrease market value. And unrealized increase, decrease in value of available for sale securities is that adjustment to either increase or decrease it. Okay. And the other thing we can have in here is the foreign currency translation. This is translating your financial statements from a foreign company into US dollars. If you have something in the foreign and you have to convert it into US dollars, that's your foreign currency translation. And the two together is other comprehensive income. But we also don't want to forget we have to subtract off treasury stock. That is not part of comprehensive income, but it is in there. And usually at treasury stock, I'm going to put in here, hope I can, at cost. Yeah, I didn't think it was going to let me. Okay, because it's a formula. But normally that's at cost. Okay. And then total stockholders' equity is, let's do it this way, equal summation. This would be easier. It's those added up. Oh, what did I do? Hit it again. Okay, try this again. Equal summation. There we go. 332,850. And then to get the total, we take the total liabilities plus stockholders' equity, and it gives us 486,710, which is equal to our balance sheet, so everybody's happy. Okay. Now, we'll go to this section. I can get this one on here. This is a real simple one. This is the statement of shareholders' equity or stockholders' equity. And what you do is you go through and you put the changes in, okay, for what that happened during the year. So this is for the year ended December 31st. Our beginning balances, of course, would have to be given to us. And then you list what changed. Well, we had an unrealized increase, decrease in value of available for sale securities. So that's 98.50. And we look at our records and we say, okay, it changed by 1570. Okay. Then we had the foreign currency translation, and that changed by 1100 from over the year. And then we have net income, of course, and we have 45,530, which you would get from your income statement. And we paid out dividends of 16,300. And preferred stock, we sold preferred stock this year, so that's 37,150, and the additional paid in capital is 11,500. So what you would want to do then is sum these. You start here, add them all the way down, and then the easy way of doing that, of course, would be to go across. Now, you also have to add these down. I already have the summation in there, so if I copy that down, that will take care of that. And you notice we have 332,850 there. We come over here and we have 332,850. So we're happy because it balances, and that should be it. Hopefully this video helps on the balance sheet and the statement of owner's equity. Keep in mind, don't keep this complicated. All this is the changes that you have in the accounts in the stockholders' equity section. And thank you, and I'll see you later.